With a new government taking over in the UK, there's now pressure being put on them to take a look at our ISA accounts and make some big changes. So I thought it would be useful to have a look at what's been said, what could happen, and also whether or not the British ISA, remember that, is actually going ahead that I covered earlier this year. First up then, what's being said? Well, in a letter to the new government, AJ Bell and Hargreaves Lansdown have jointly made some suggestions to improve the current ISA accounts. They say that the current system needs a radical simplification because it's holding people back from investing, and if improvements are made, this could help the UK market finally make a bit of a comeback. Now, for a bit of a reminder, here in the UK, your ISA accounts, which stand for individual savings accounts, allow you to save or invest up to £20,000 each tax year completely tax-free. At the moment, things are quite complicated because you have 4 different ISA accounts and they all do slightly different things, but they share that £20,000 allowance between them. I talk a lot on this channel specifically about the stocks and shares ISAs, as these are specifically for investing in the stock market, but you do also have the cash ISA, the lifetime ISA, and the innovative finance ISA, which is always hard to say on camera. Now, just for some perspective, you also do have the junior ISA as well, but keep that one separate for now. But anyway, at the last count, around 12 million ISA accounts were being used in the UK, with most of those being cash ISAs, followed by stocks and shares ISAs. Just over 7 million cash ISAs were being used and just under 4 million stocks and shares ISAs, meaning that of an adult population of around 45 million, less than 10% of UK adults even use a stocks and shares ISA. Now, going back to this letter that was sent to the new government, they say that one of the things that needs to happen first is to simplify the ISA system by having less accounts. Now, I definitely agree here, and I think there's just no reason to have so many different types. The average person on the street would not be able to tell you the difference between all of them. And I agree with both of the comments here from Fidelity and Aberdeen. They say further simplification is needed, and the ISA brand has been stretched too far with several competing ISA products acting as a barrier to entry. The next thing they suggest is that stamp duty on UK shares should be scrapped. Now, for those of you who don't know, if you buy UK listed shares, you get charged 0.5% of the total transaction as stamp duty. Lots of people have argued that this is one of the reasons why UK stocks have been unloved by investors, as they claim that this is just yet another barrier to entry. However, I'm not so sure on this one. I think scrapping it would be nice, but I doubt people are looking at comparing Microsoft with AstraZeneca and saying, I better go with Microsoft as there's no stamp duty. Let me know in the comments on this one if you disagree, but I don't think this one will move the needle too much. Now, the final big note in this letter to the government was on the topic of the British ISA. Now, I covered this when it was first announced by the former Chancellor Jeremy Hunt, and as a reminder, this is a new ISA account that would give you an additional £5,000 of tax-free allowance to invest on top of the existing £20,000. However, rather than just give you more money to invest how you like, the idea of the British ISA is that any of the investments you make have to be invested in the UK market. Now, as of today, there's not been much more detail given than that, and it's been in consultation since it was announced. Also, we don't even know if this is something that's set to go ahead, and it might not even see the light of day. In the letter to the government, Hargreaves Lansdown and AJ Bell have both said that they think yet another ISA product will make the system even more complicated. And they would rather just see the £20,000 allowance raised to £25,000 a year and then kept to a single ISA account where you could do all of your saving and investing in a single place. I'd have to say that I agree here, and I think this would make a lot more sense. As you saw in the stats earlier, way more people use cash ISAs than stocks and shares ISAs. And I think at least some of the reason for this is that people don't understand how investing works. Now, I try to do my part on this channel, but most of you watching are more than likely to already know a bit more than the average Brit. Now, on that note, if you don't want to help get more people invested, please don't forget to make sure you're subscribed and do hit the like button too. It will help get the video out to more people and hopefully out to more people who've never invested before. Now, just back to the British ISA for a moment. I think one of the biggest problems with this is trying to define what a UK investment actually is and how you'd qualify that. You see, at the moment, some of the biggest companies that are listed on the London Stock Exchange do most of their business outside of the UK. In fact, around 80% of the revenue generated by the FTSE 100 comes from outside the UK. And while this might be a good thing from a diversification point of view, I can't see how any money invested in these companies would directly benefit the UK economy. And also, if you take the FTSE 250, which is made up of smaller companies which tend to do their business a bit more in the UK, you still have them earning around 55% of their income from abroad as well. So in my view, I really do think that you'd struggle to even define what a UK investment is. And if it had to make most of its money in the UK itself, I think the amount of options you might have could be pretty limited. Also, let's not forget that from a provider's point of view, this could also be a bit of a nightmare to manage. You'd have to set up a whole system of new accounts for investors called the British ISA. You'd then have to make sure that only permitted investments could be put in those accounts. And then I'd bet that this would end up costing you quite a lot more money as an investor in fees, as potentially new investment funds would get created and then the market for them would be quite small anyway. Who knows? But I honestly think that there are way better things that you can do as a government if you really want to get growth going in the UK for business and attract the best and brightest to work and build businesses here. But please do let me know in the comments after this video what you think, because I think this is a very, very interesting topic. Now, on that point, what's the solution and what are the government going to do with ISAs? Well, at the moment, all we have is that they're looking to simplify them. We have no further detail yet, so all we can do is speculate and guess what the future of ISAs might be. First off, I think that simplifying the system will be a great first step, as clearly they are a bit too complicated at the moment. I mean, I still get very basic questions all the time on the videos I do about them. I'm glad this tax year we can now open as many ISA accounts as we like, so long as we don't go over our £20,000 allowance. I think this was a really great first step, and it means you aren't locked into one provider anymore, so you can try out multiple platforms. Now, if you are looking to get yourself started with the Stocks and Shares ISA, please do check out the links in the description below to the platforms that I use. There are always new customer offers available with free cash or free shares. Now, moving forward, yes, I do think that a single ISA account would make a lot more sense where you could invest and save in one place. I also do think that you might get more people investing their money as they might start to be a little more curious about what options they have. I do think that there is a huge knowledge gap in the UK when it comes to investing, and there's so much money sat on the sidelines earning nothing or being completely unproductive. In fact, here's a bit of a crazy stat for you. Apparently, there is about £253 billion sat in current accounts earning virtually no interest right now, and over £900 billion earning only just above 2% in easy access savings accounts. Now, even if we say that half of this is for short-term uses and should probably stay in cash-like investments, can you imagine what the rest would do if people knew how to invest with it? That would be a huge injection of cash into the stock market, and the UK would definitely receive some benefits there. Just think, even if people want to take very low risk, there are money market funds out there that will track the base rate so you can be earning more than 5% on your money right now. Likewise, if you are saving cash for the long term, this could be better used by investing, as cash in the long term is almost always going to underperform a well-diversified investment. Remember that if you're not getting at least the rate of inflation as interest on your money, you are losing money in your pocket. Now, I might do a full video on this, as I think this is one of the most important things that we all need to fully understand. Now, the second point about the British ISA and the extra £5,000 allowance. Personally, I think that we should just increase the ISA allowance by £5,000 and then put all the ISA accounts into one name and then call it a day. The reason for this is that I think having another separate account and calling it the British ISA is really only going to benefit people who are probably already maxing out their ISA accounts and just want more places to put tax-free cash. I checked out the latest stats, and apparently only about 7% of people ever max out their allowance anyway. So it's not the allowance that's the issue when it comes to investing. I'd argue that it's the knowledge in the first place. Now, I'm not going to turn down a higher allowance, but I am skeptical that it will actually achieve what it's meant to do. You see, the idea is a good one, that the government wants to attract more investments into UK companies. Currently, lots of money has been flowing out of UK funds and UK investments, if you look at the latest data from the Investment Association. And to be honest, it's no surprise when you look at the performance of the UK market over the last few decades. It's been, quite frankly, very poor. You can't expect people to put money into a UK-listed business just because it's based in the UK. People want returns, and right now at least, those returns are not being made here. I did read that in UK ISA accounts, people tend to overweight UK investments already because of their home bias, with the UK making up 20% of their investments, even though it makes up less than 4% of the global stock market. Also, if you look at the performance, this is really all you need to know. The global market, the FTSE All-World Index, has done 314% since 2012, and the FTSE 100 has done just 140%. Now that's in total return, just in case you want to check and tell me I forgot about dividends. So that's with everything being reinvested. Not good at all. So for me, it's a bit of a chicken and egg situation. If you want money to pour into UK companies, then you have to deliver good results. Now, how can you deliver good results? Well, I guess that's the tough question, but I think you're going to have to make the UK a great place to do business. You're going to have to compete with Silicon Valley, create big tax incentives, and really focus on getting highly skilled workers to the UK, or at least help grow them here. Forcing people to use a new investing account and saying that you can only invest in UK companies could have some really negative long-term effects. You could end up significantly underperforming the global market. And then I think all this does is make people think that investing is either too risky or just not worth it at all. Obviously, none of us know the future, and UK stocks could do great over the next few decades. After all, you can't invest in the past, but hopefully you see my point. I guess this is where it's worth starting the conversation in the comment section. What do you think should happen to ISA accounts in the UK? Keep them as they are or make some big changes? And then what about the British ISA? Do you think it's a bit of a stupid idea, or do you think it will actually help boost investments into the UK? Also, I know I've not covered this here, but do you think there's any risk that they end up getting taxed in the future? I'm looking forward to hearing what you all have to say. I'll see you in the next video. Happy investing.